While the United States is often seen as a leader in both financial and technological advancement, it has clearly struggled in recent years to establish clear crypto regulation frameworks. This lack of clarity has allowed other countries, particularly in the Middle East and Asia, to take the lead. High-growth economies in these regions are creating frameworks tailored to digital assets, which are often more effective than those in the West. These regulations offer a model for the rest of the world to follow. If the West doesn't catch up, it risks being left behind as the crypto industry shifts its center of gravity. In the past years, the US has struggled in its attempt to regulate the crypto industry, with regulatory entities such as the SEC often taking hostile and inconsistent measures. High-profile lawsuits against Ripple and Coinbase made headlines globally, which have cast a shadow over innovation and pushed some crypto firms to move to friendlier countries. The absence of clear guidelines from the SEC has left founders and investors walking on eggshells, uncertain if their next move could get them into legal trouble. One of the main issues is that the US has been trying to fit digital assets into existing laws, securities and commodities regulations, which were never designed for crypto in the first place. While the US newly elected crypto-friendly Congress indicates hope for progress, the country has a lot of catching up to do. Waiting for the United States to set the standard is no longer viable when others are already leading. In the meantime, high-growth markets such as Indonesia and Malaysia have introduced a new way to approach crypto regulations, with an understanding that digital assets are not enemies but should be regulated like any other asset. While the US SEC spent years trying to classify cryptocurrencies such as Ethereum as securities, Indonesia's Commodity Futures Trading Regulatory Agency officially classified all digital assets as commodities as early as 2019. In Malaysia, the Securities Commission created a comprehensive framework for crypto exchanges with high standards for licensing, investor protection, and anti-money laundering. This has also been implemented in Indonesia, which rolled out clearer rules for exchanges, such as mandatory client fund segregation, strong security demands, and token listing requirements. In both countries, these measures have reduced fraud and improved trust in the overall system, making using crypto safer for everyone. This is the level of clarity and engagement we need as we move into broader Web3 adoption globally. As a result, the Asian crypto market is thriving. The Indonesia crypto market surpassed $30 billion in transactions from January to October 2024, a 350% increase compared to the previous year. It is now the third largest country globally for cryptocurrency adoption, just ahead of the US. In fact, in this index, 7 of the top 20 countries are in Central and Southern Asia and Oceania, which signals that the crypto world is a multipolar industry.